You're watching the first episode of Deal Flow. This is CNBC Africa's show that tracks merger and acquisition activity in South Africa and beyond. I'm Erica van der Merwe. Let's get into the deals of the week to set the tone. The bid for computer business Dell remains heated. Dell's board has challenged the offer made by activist investor Carl Icahn, saying his offer falls almost $4 billion short of the cash needed to fund his proposed dividend plan. Australian surfwear company Billabong revealed that potential suitors had walked away from a deal. The announcement came as it issued its third profit warning in 6 months. And NYSE Euronext said its shareholders approved the exchange operator's $8.2 billion takeover by Intercontinental Exchange. And in South Africa, a listed group, Oceana, which is the country's biggest seller of tinned fish, is buying Food Corp's fishing unit for 445 million rand. The deal increases Oceana's fishing rights meaningfully. And Afrimat has increased its offer consideration for the InfoSource shares from 35 cents per share to 65 cents. Over the next few weeks here on Deal Flow, we'll be updating you on all the big deals, the threatened hostile takeovers, and the lesser-known transactions, the world of investment banking, corporate takeovers, and private equity deals on your screen. Tonight's expert guests are Duncan Church, Head of Corporate Advisory at Thornton, and Doron, Joffe, Director of the Corporate Commercial Department at Edward Nathan Sonnenbergs. Welcome to you. Really good to have you here on the first show. Doron, let me start with you. What's your impression? I mean, this is what you work on all day long, and you deal with clients, and you're seeing the sentiment for the lie of the land. Is there a pickup on M&A, merger and acquisition activity?
I think we've seen that activity this year it's roughly in the first quarter was the same as last year, with the deal value slightly higher. From the numbers and the transactions that I see we're working on in the office, I think we'll track that, if not do a little bit better, in the second quarter of this year. As
a firm, you might be specializing in sectors, but could I ask you, what's your impression of what sectors are attracting interest?
Well, I think what we see now, for the first time in a long time, private equity looks to be back. So we've seen a lot of private equity interest, both foreign and local, looking at various assets at the moment. Those transactions haven't happened yet, but they're in the process, and private equity certainly looking much more aggressively than they have been in the last couple of years.
Duncan, is that your impression, your experience?
Erica, we're seeing some pickup in due diligence work, which is normally a precursor to more transaction flow. At the moment, there still are not that many transactions being concluded, but the deals also seem to be of a smaller size, generally speaking.
So how would you explain that? So there's interest, both of you saying there's interest, but Duncan's cautioning that we weren't necessarily seeing a clinching of deals and a popping of champagne corks in this process. So there's still a degree of caution that you're describing, Duncan.
Erica, I think that's a worldwide phenomenon. I think there's a huge amount of risk aversion out there, and South Africa is no exception. In fact, in South Africa, it's probably more pronounced than it is in the rest of the world. And it's very difficult at the moment to conclude transactions. There's still a big disconnect between buyers and sellers in pricing of transactions.
So sellers wanting more for their businesses, and sellers really not having the appetite or the confidence to go ahead.
Correct.
I think if you look at certainly at the listed shares, they trade in quite high at the moment. So you've got this uncertainty going on in the environment, yet with still quite high prices. So that disconnect is, I think, leading to a lot of transactions not happening. And
pricing in the listed market being sort of the benchmark for pricing in the unlisted market, right? So even those prices being pulled up because of, as you say, other factors driving up valuations.
Yes, but we are still seeing in the private, in the smaller deals, we're still seeing more activity. So those deals seem to be happening. I don't know if Duncan would agree.
Yeah, I think there's a huge disconnect at the moment, in fact, between the prices of listed securities and those of private companies. The quantitative easing which you're seeing around the world is certainly driving prices of listed equities, in our view, and that's not necessarily filtering through to prices on private companies.
That's an interesting point. So it must have an impact, but not fully transferring through. So the fact that it's unlisted and therefore illiquid, there's a discount as a result of that.
Correct.
BE transactions, Doron, is that still a driver these days of transactions?
No,
Is all done and dusted?
I don't know about all done and dusted. There still are some, but it's certainly not a major driver of M&A activity in the market at the moment.
You referred earlier to private equity really coming in, both local and global. What are they telling you? What sort of businesses are they looking for? And is it in the South African realm or more broadly in Africa?
They're looking both the internationals are looking both in South Africa, but also with a keen eye on Africa. So some of them that we've seen have got mandates to conclude transactions basically through the whole of Africa. And one of the markets they look at is South Africa, but it's certainly not their sole focus. So I think those companies would be making acquisitions throughout the continent.
There's huge possibility for doing more transactions in the rest of Africa. They call it the developed world is looking for yield. They are coming from an environment with very low and in some cases negative interest rates and returns, and Africa as a developing market is attractive, and there is an opportunity for South Africa to channel some of that investment appetite through. We have the resources here, but it's certainly not easy, and just because we at the southern tip of Africa here, we're not always in tune with what's happening in the rest of Africa, to be honest. So something for us to work on.
A few elements there to explore, Duncan. So it touches on the whole Gateway to Africa theme that South Africa claims to have. So you're also suggesting that we should make the most of that. If there's attention focused on Africa, for South Africa to make sure it is indeed in the spotlight. If we look at some of the regulatory issues around deal making in South Africa, there's also exchange control, there tax issues. What's your impression of what these elements are doing to the attractiveness of South Africa as an environment in which to do deals?
I'm not sure that the regulatory environment is a problem, because there are enough advisors to guide you through the process, is my impression. I think that perhaps...
Speaking as an advisor.
As an advisor. But there's whether it's perception or otherwise, there's a perception of doing a risk of doing business in South Africa at the moment. I mean, there's a huge amount going on, particularly in the mining industry, and in fact, I think for many foreign investors, the rest of Africa is perhaps looking more attractive at the moment than South Africa is.
Doron, coming back to that question I asked you earlier about the sector, what sort of appetite are you seeing for mining assets in South Africa and Africa?
Well, we've seen certain foreign clients, some of them being nervous, but at the same time there still is interest from, for instance, Chinese clients we have that are still looking at assets in South Africa. So I think there still is an interest, but with this uncertainty, we're probably going to see far less deal flow than we would see if if the markets were stable. Just back to your question on regulatory environments, because we get asked this question quite a lot. I don't think there's any regulations in South Africa that most foreigners will not be used to. So if you're doing an acquisition in South Africa, most of the regulators are pretty similar to what they've got in the UK, in America, in Australia. So those hurdles, the foreigners are actually pretty used to dealing with. And we don't see too much difficulty with that.
Even with exchange control regulations?
Exchange control, while I mean it's one extra hurdle which a lot of countries don't have, they still they're pretty efficient in the way they handle things, and there's not too many restrictions from foreigners investing into South Africa. On the debt side, it's a bit more complicated, but we don't see that as a major obstacle for M&A flow. I think the regulations, our clients get pretty comfortable very quickly with what to do and how to operate in the environment.
And then, as part of setting the scene for more programs on deal flow to come, looking at the Africa story, what one often hears is, yes, tremendous appetite, as you said earlier, Duncan, in a structurally low return world, there's this appetite for returns from Africa. But with deal makers coming and not necessarily finding the deals of scale that they need. So it's in the mid-market to the smaller end. So it becomes relatively expensive to find and to do those deals.
Erica, there's obviously transaction costs are not necessarily scalable. So costs on a small transaction are often very similar to what they are on a large transaction. But having said that, there's the example of the recent Walmart Massmart transaction where my impression and perception of it is that there's Massmart sees it as the first step in a much bigger sequence of transactions in getting into the consumer market in the rest of Africa. So one should view the entry into South Africa as the first step in many more into Africa, which could justify the costs.
We've got plenty of rumours flying around about the adcock offers and who those might be. But Doron, I believe you somehow on one of the sides working on that, so you can't tell us too much about that.
Unfortunately not.
All right, well, let me just close off then. You've both indicated right at the beginning that deal flow is picking up. So, Doron, my impression is that you're a bit more upbeat, a bit more bullish on what that's going to look like. Say by year end, would it be a tangible improvement?
I hope so. It's very difficult to predict because what we sometimes see is deals in the pipeline look good and then for some reason they don't happen. So by all accounts the deals are running and hopefully we'll have good news to report by the end of the year.
Assuming we have supporting good sentiment, Duncan, your views for by year end?
Erica, I'm not as bullish perhaps as Doron. I think this thing's got a bit longer to run and it'll play itself out for at least another year or so. I think possibly towards the end of 2014 we could be seeing a lot more activity.
Gentlemen, thank you for being part of this first episode of Deal Flow. Duncan Church is from Grant Thornton, Doron Joffe from Edward Nathan Sonnenbergs. It's a wrap of this first episode of Deal Flow. Do stay with us, tune in every Monday evening. Until then, from myself, Erica van der Merwe, goodbye.